TJ the Wheel Deal coming at you live. It is Monday, January the 5th, 8:30 a.m. Central Time, Texas time. We're going to get into it. It's a different format this year. I'm going to be looking for a trade. So every trade that I make in 2026 is going to be live. That way we can clip them after. And a lot of y'all that aren't able to tune in for the entire live sessions, I'll see if I can get Alex to clip all the sections where I actually made a trade and turn those into shorts for you guys. So that is going to be the game. That way I can talk y'all through all the gimmies and gotchas. And we're no longer in, I'm like, why'd you get into that trade? Oh, what are you trying to do? Oh, watch the damn short video. If you didn't tune into the live, it's all there. This is why I sold those puts on SoFi. This is what I'm planning on doing. Am I going to take assignment? Am I going to how am I going to manage the trade? How am I going to manage the trade so that you guys can follow along? Because I know there's a lot of y'all copycatters out there. I know there's a lot of copycatters out there. I don't recommend doing that. You got to learn how to fish if you want to create something that's sustainable for you and your family. But I also know that if I was on the other side, my tendency would be, well, there's a dude making a crap load of money and he's doing it live and in color. I'm just going to do that until I get more comfortable doing it on my own. So because I have that going on in my subconscious, I'm like, let me just do every trade live. And hopefully that will show you guys how to fish. Book update. We are making progress, guys. We got a working manuscript. There's about 2 or 3 really key points that I want to add to it. And then I feel like we'll have a finished manuscript. And then I'm going to put a Wheelers together with 2 to 3 folks. And we're going to go through the whole book. It'll be a private Wheelers for members only. But we're going to go through the book in its entirety and try to make it better as we go. And then I'll send it over to publishing. Hopefully we can finish it all here in the next 3 or 4 weeks. So thanks for being part of that journey. I appreciate the 106 people rocking with me this morning, the 19 people on YouTube. And I'm going to take y'all through my day. So these might end up being longer sessions. You can probably see dogs barking, wife barking orders. I mean, everything. This is chaotic in the mornings. That's why I don't typically do this. And then I'll even watch other YouTubers or whatever. I know Jesse Dow is on, so we may tune into his channel, see what's going on over there. We may tune in to Amit, all that stuff. So I'm gonna figure it all out. I got the TV in the background right now. I'm sharing the entire screen. Maybe I'm only gonna have to share the window to get the audio if we go into other channels and all that stuff. So that's gonna be kind of the format. So bear with me. I have to figure out how to share the screens and stuff whenever we go tune into other YouTube channels to see what they got going on over there. What's going on, Shamu? What's going on, Vince? T-Bill? This is awesome. Appreciate you guys. I hope you guys are doing well. I feel good, man. I feel good. So this is like tuning in live, right? This is whenever you tune into this channel, you're gonna see somebody sell puts and calls live. I don't have a course that I sell. Get your ass to class. You know what I'm saying? Like that's probably what we should be. That's probably what we should title it. Get your ass to class. You know what I mean? Like, oh, I wonder what they talk about in there. Well, why don't you walk in? This is an open forum. Why don't you walk in and see what's going on? We sell options live. There's a lot of channels that talk a lot about stocks. They're very, very popular channels. We watch them too. I watch them too. But they don't actually make any trades over there. You know what I mean? There's a big difference there. Here, our little mode is we operate with full transparency. Because I don't care what you have to say about a stock. That is just an opinion. That is not going to make me any money. I can't borrow that conviction. I can't do anything with that. It's useless. It's useless. But if you show me a trade, I'll know exactly where you stand with that stock because we all vote with our wallets at the end of the day. And that is why I stand behind full transparency. If somebody's not willing to be transparent about their position, I don't give a shit what they have to say. That's just how I operate. That's why you don't see me going on a bunch of these other channels and trying to like build my case for the SoFi's, the riots, etc. of the world. It's irrelevant because at the end of the day, the only thing that matters is my position. How am I managing that position? How am I manufacturing the win? How am I trying to make money with that company? That's it. That's it. That's what this game is about. It's about credits and debits. And at the end of the day, you're going to have a lot more credits than debits. So we're not going to sit here and waste a bunch of energy talking about companies. We are going to try to figure out how to make money with said companies. Because at the end of the day, we're all trying to grow our portfolios. Type in there if your objective is to grow your portfolio. Or is your objective just to be entertained, talking about a bunch of stocks and putting a bunch of tickers on the screen and getting real excited when the stocks go up, down, sideways, or in circles? If that's your objective, this isn't the channel for you. If your objective is to make money and grow your portfolio, then you've walked into the right class. Imagine being at the university and you get to audit a class for the first day, and the very first thing that the teacher says, it's in economics, it's a finance class or whatever. Let's say stock 101, options 101, whatever the class is. Let's pretend I'm your professor at the University of Texas in Austin. So we'll take anybody over there. We got a lot of people over there. Tuition's pretty cheap. It works out. And the first thing I say, the object of this class is to show you how I make money live. Do with that information what you will. But that's the objective of this class, is to show you how I make money live. Do with that information what you will. The market's open. Let's see what's going on over there. Let's see what's going on over there with the market, because at the end of the day, that's what it's about, right? Let's see what's going on. And I'm seeing a lot of green on the screen. I am seeing a lot of green on the screen. So now we're going to go over to the other side. We're going to go over to the other side because here it is just a little bit easier to show, a little easier on the eyes, if you will. Let's see if I can make it even a little bit bigger. I don't want to lose my cap requirement because I need that. Okay, we're going to rock with it here, I think. Okay, I'm going the wrong way. I want to go bigger. That's what she said. Okay, there we go. That should be pretty easy on the eyes, guys. That should be pretty easy on the eyes right there. I'm not able to see y'all's comments anymore as soon as I get to the screen where we're actually potentially going to play some trades, right? So right now, the objective is I'm looking for a trade. So I'm going to show y'all whenever I first open the portfolio, what is it that I'm looking for? What stands out? Like, what stands out? How do you read the tape, if you will? Like, how do you read your tape? So the first thing that I always do is I always like to see, now granted, I wouldn't be in privacy mode. I have to be in privacy mode here because I don't know you guys, right? So I can't expose a bunch of account numbers and stuff. But whenever you're in privacy mode, you lose things like buying power, utilization, and percentage, and those types of things. So there's some metrics here that are very, very useful to me that aren't available. So I'm going to have my phone over here that isn't on privacy mode so that I can have access to information that is very, very pertinent to me. So bear with me. There's going to be some limitations here because of the type of mode that I have to operate on over here. Oh, the thing is I have privacy mode now on the phone too, because I guess everything's connected. Shoot. Well, that sucks. Oh, anyway, the net liquidation value on this particular account should be about $56,000 right now. So let's look. So what do we got going on here? The way that I read it is if I own shares, the first thing that I do is I start with the shares. What did I pay for the shares? What are the shares worth, right? So I got 8,500 shares here. This is the little account, son's account, ending in 47. That's my son's account. So I got 8,500 shares. I bought them for $613. They're currently going for $662. The extrinsic value is what's the value of the option, right? If the option is out of the money, it's going to consist of nothing but extrinsic value. If the option is in the money, the options price is going to consist of intrinsic plus the extrinsic value. But we're going to get to that here in a second. Let's stay on the actual shares right now. So we got a trade price of $6.13. So we got 8,500 shares that are bought and paid for at $6.13. They're currently going for $6.62 and dropping. So we're up $4,200 on those shares for the day. Collectively, we're up $4,000. So right now, this is a pretty lucrative trade. And we've got the shares for sale. If you look at the row on the bottom, we've got the shares for sale. We got negative 85 contracts. So that corresponds times 100 for the 8,500 shares that are basically for sale via a covered call. So what's a covered call? Real basic. It is an agreement to sell shares at a certain price on a certain day. So I own these shares at $6.13, and I've got an agreement to sell those shares for $11. Where I went to school, $11 is higher than $6.13. So I'm essentially saying, hey, I want to make $4.87 in profit per share, right? That's what I'm signing up for. So I'm like, so we take 11 minus 613. That's $4.87 times 8,500. So I'm basically saying, hey, I'm willing to make $41,395 in profit for selling shares that I bought at 613 for 11 days from now, which would be January the 16th. And for doing that, I got paid money. How much did I get paid? 39 cents. So 39 cents, so $39, it's all multipliers of 100. We're dealing with options. So $39 times 85 contracts. So I got paid $3,315 for that. So when you see the profit and loss open at 26.17 plus the 680, that's going to give you the 30. That's going to give you roughly the 33.15, right? So we'll go 26.70 plus the extrinsic value, which is 680, 33.50. So where's the difference there? It's the fees, right? That's why the math doesn't exactly math on Tasty Trade, is because you got to take into account the fees. So that one's looking pretty good. Like right now, I could close the trade completely over here on the covered call and be like, I'm gonna give you $680 back because I feel like this thing's going to the moon and I don't want to sell my shares at 11. But because we're so far out of the money, $680 is a lot of money for a $56,000 account. I'm not going to give back any of that money. See, I'm talking out through the entire mindset. It's all situational. There aren't some hard, fast rules that I adopt in every situation whenever I'm selling puts or selling calls. It's all situational. How do I feel about the underlying? Has the investment thesis changed? We're dealing with a covered call. Gun to my head, I have to sell these shares at $11, 11 days from now, and it moons to 14. Am I going to be that angry? Not really. Not really. Why? Because $8,500 shares times 11, the account's sitting at 93,500 plus the 3,300 that I got paid. I mean, we're approaching $100,000 again. What is there to be angry about? I know this is a leveraged ETF. As quickly as it goes up, as quickly as it could come back down. So I don't want to overstay my welcome here. So on a leveraged ETF, I am not likely, guys, I am not likely to keep kicking the can down the road on a covered call. If I have picked a strike price that I'm comfortable with, I have achieved my objectives. I am totally okay having those shares called away, getting back into cash, and then I'll figure out another place to deploy that capital. It could potentially be on a pullback right back on BMNU at like $8 or $9. Go sell some puts over there at $8 or $9. Let's fast forward life 11 days. Let's just say this thing's trading at 14 or 15. I opted not to roll out and up because I wanted to lock in a win. I understand the tax implications, all of that stuff, but I want to be sitting on 95,000 bucks in cash, give or take. And then I'll make an agreement to buy these damn shares back at like $9, and they'll probably pay me $5,000 to $10,000 for that. I do that 2 or 3 rounds. I'm going to go pick up the $20,000 or $30,000 that I potentially left on the table if this thing does a moonshot. What would be the absolute sweet spot here? What's the Goldilocks scenario here? It's for BMNU to be trading at like $10.95 in 11 days because I still own the shares. So I don't have that massive tax implication yet. But then now the next round of covered calls, I'm probably going to get a lot more than $3,300. I'd probably get, $6,000 or $7,000 in covered call revenue and covered call premium. So I'm sitting pretty good here. What don't we want to happen? We don't want BMNU to tank back under like $5 because then now all of those gains go away. You see, this is where I want to help you guys out mentally real quick. And once I get done with this particular position, I'll minimize, I'll talk to you guys, do live Q&A, and we'll go back and forth. And we're going to go over most of the positions in all of the portfolios. So there's 8 portfolios here. So this could take a while. Again, you're logging into class, right? If you're logging into class, it's a 60-minute class. It's a 90-minute class, right? On Tuesdays and Thursdays, those are typically 90-minute classes at the university. Monday, Wednesday, Friday classes are usually 60 minutes. So I'm kind of going to keep the same format as if you're legit walking into class. But what we do here mostly is we sell options live. Give me a thumbs up if y'all like that kind of class. A class where you actually try to learn how to make money in the stock market. Watch the professor make money in the stock market. Not that I have the credentials of a professor. I'm not Dr. Jim, but you know what I mean. So that's what's going on here. Feel good about it. I feel like this is a very, very risky position, but we're in a pretty good spot. And the best thing that could happen for this portfolio is for this thing to shoot up to 12 or 13 bucks, and I lock in the win. I get back in cash. I reassess. And then maybe I go play short strangles on something a little less volatile, and I try to figure out how to make $3,000 to $5,000, $10,000 per month. Gavin, don't do that. He's trying to eat an extension cord, and I don't want him to get electrocuted. These dogs are crazy. So that's what's going on with that particular portfolio. Let me check in with you guys, and then we'll get back on the portfolio and we'll go through some more. Examples. Growth towards financial freedom. Ed Mejia, what's going on? Slumberjay to the moon. I'm telling you, man, they captured that dictator, and it seems like the market's liking it so far, right? Seems like the market's liking it. Boondock, what's going on? Appreciate you. Hey, wow, from Lithuania. That's crazy. Appreciate the 440 people that have seen it on X, 37 people live. We're going to be growing this number, guys. I'm going to try to go. It's always in the range game. I play for the 5th time. That is so awesome. Yes, and when you find that menu item for your hamburger stand, Vince, that just works, there's like a sense of guilt that sets in after a while, and you're like, oh man, could this really be that easy? And sometimes it is. It's not always going to be that way, but sometimes it is. I mean, SoFi has just been a money printer for us for the last 3 years or so now. And it just seems like at some point the music's going to stop, but it hasn't stopped. And this is where you formulate an investment thesis. You have 3 to 5 year horizon, sometimes a 10-year horizon. Like Tesla got like a 10-year horizon to see that whole thing play out. And you just sell puts and calls along the way. You buy the timely leap. You do some strangles. You can do some spreads, credit spreads, put credit spreads, call credit spreads, which would be an iron condor if you wanted to combine both of them. You could go synthetic long, right, where you sell the puts, you sell the leap puts, use those premiums to buy some leap calls. So you're essentially financing the leap calls with the leap puts, buying those leap calls, having unlimited exposure to the upside with other people's money. I mean, that's the American way, right? Like synthetic longs is like maximum leveraging, in my opinion. So it's absolutely awesome because you're picking a strike price that you're very, very comfortable when you sell the leap put. And then you use all of those premiums to buy the leap call. And if this thing does a moonshot, you never had to own the shares, but you got paid like you did because those leap calls will print. And it is just a really, really nice way to have some exposure to some stocks that you're very, very bullish on. Anyway, let's keep it going. Let's keep it going. Super cool. Yeah, I think that's a great trade. I think that's a great trade. Welcome to Will Donation. Appreciate you. So let's keep it going, guys. Got a lot of portfolios to get through today. So let's keep it going. So now we're going to go over here and we're going to go find one over here. We're going to ending in 45. So this is a $92,000 account or so. So let's see what's going on here. Look familiar? We got 2,500 shares of BMNU at an average trade price of 572. So over here, got a much better entry point. This is great. This is absolutely great. But we got an agreement to buy 5,000 more shares at $7. So that would bring the average up a little bit, right? That would bring the average up to probably like 620 or something like that. I'm just doing some math in my head. Got a calculator here, but we don't need to get too in the weeds there. Y'all can do the math, right? If you own 5,000 shares at 7, you own 2,500 shares at 572. You know, you can have about a 625 average, something like that. Maybe 625 to 650, just kind of eyeballing it. But we also got these shares for sale at $8. So we're running a very aggressive cover call campaign here. And we know that two things can't be true. This thing can't be trading below $7 and above $8. Those things are mutually exclusive. It's either going to be below 7 or it's going to be above 8. What would be a nice sweet spot here? Between $7 and $8, because you still own the shares. You continue to run your cover call campaign. And then you no longer have an obligation to buy 5,000 shares of BMNU at $7. But I'm selling the covered calls here because I want to lower the adjusted cost basis on the shares that were bought for $5.72. So you can see right there that we collected 42 cents. So you take the 45 cents. So you subtract the 45 cents from the 72. That's 55, 65, 75. So 27. So that's 527, I believe. Does that sound right? Man, let me use my calculator. It's too early for this. 572 minus 45. Well, I know that's 37. So 572 minus 45. Yeah, so 527. So we've got an adjusted cost basis already at 527. But then also on the puts, we got paid 75 cents. So that is going to be an adjusted cost basis on that batch at 625. So we're still sitting pretty good. We collectively all in, and we get assigned these shares at $7. We're still in this thing for about $6. We're in the driver's seat in this particular position. But it's also effectively saying that we're all in on BMNU. So the best thing that could happen is run a successful campaign, log a profit, and move on. That's the best thing that could happen for the portfolio. So now we have a less risky play down the road, 128 days from now, or 130 days from now. We got an agreement to buy 5,000 shares of PayPal at $52.50. So how are you able to do that? Is because of the capital requirements, right? Like, this is the beautiful thing about Tasty Trade is imagine this having to be a cash secured put versus a put sold on margin. So here we're utilizing $42,000 of capital to bring in quite a bit of money. Look at the extrinsic value, $13,000. So this portfolio is going to be sitting really, really pretty here very soon, provided that we have a successful BMNU campaign. So if this leverage play on BitMine works out, we're going to be sitting on quite a bit of cash, and we're going to continue to babysit this short put in the distance on PayPal to ring that cash register to the tune of $13,000. And then we'll look for some other short strangles or covered strangles, because this is a quasi covered strangle over here. And we're just going to keep doing that and doing that. And we're just going to go try to find $10,000 bills at a time. So got a portfolio about 100 grand. That's always the objective. It's like, okay, how can I position myself to make $5,000 or $10,000 10 times over? And then we can get to 200 grand, because life gets fun at 250 grand. Whenever you're selling options, guys, life gets fun at 250 grand. It's just, it works. It just works. That is where you're like, okay, my business is fully capitalized. The world is my oyster. I'm ready to go print money. That's why I'm using the thumbnail, the road to 250 grand, because there's a couple of accounts here that we're on that road to 250 grand. I'm sure 80% of you guys are on the road to 250 grand. Y'all didn't know that was your number. I'm telling you, that's your number. This game gets real fun at 250 grand. So that's what's going on with that particular account. Let's keep it going. And let's go with the other account ending in 19. So the account ending in 19, now we're in that $600,000 range account. And I want you to notice something. I want something to really stick out to you guys. It's only 4 positions. Some of y'all have $100,000 accounts and y'all got like 20 positions. Like, what are you doing? Did you like start an ETF? Like, what are we doing here? You're going to have focus. If you want to create a fire, you're going to have focus, right? Imagine you're out in that Surviving Naked and Afraid show and you're trying to start a fire. You need to focus that energy, get all the right situation going to start that fire. I always use the magnifying glass analogy. Let's say that these meta glasses are the magnifying glass and the sun's shining right here. And you're trying to light this paper on fire. The only way to do that is you're going to have to focus. If you're all over the place with your magnifying glass, the sun's never going to be able to shine bright enough to start a fire. So that's why I'm a big fan of less positions, more focus. So let's talk about these positions. How bad is it? So I always like to be on days to expiration. So just the way that I look at this thing, I want to have my days to expiration in chronological order. That way I know what position needs to be dealt with. So let's look at BMNR. What's going on with BMNR? We got 2,000 shares that are owned at $39.20. They're currently going for $32.30, $32.40. So we know that that's problematic. We're down substantially on those particular shares, right, to the tune of $13,000. But the good news is we're collecting a little bit of rent. We're not just sitting there trying to tear in our beer. We're like, okay, we got caught with their hand in a cookie jar. We bought 2,000 shares of BMNR at $39.20, which, by the way, $39.20 is a pretty damn good entry point on BMNR. I think so. And we agreed to sell those shares at $42, 11 days from now. So where you see that 38.22, you see the discrepancy there, the difference between 39.20 and 38.22 is 98 cents, because that's how much we got paid when we sold those covered calls. So we're running a very successful covered call campaign. We've knocked down 98 cents. We've shaved off 98 cents from the cost basis. So now our adjusted cost basis is 38.22. That's why we don't need the tracker anymore. If you're dealing with a real broker, a major league broker like Tasty Trade, they're going to do a lot of the work for you, man. It's awesome. That way you can focus on what? Finding your next winning trade. We don't need to be accountants here. These brokers know what's going on. You just got to have a major league broker that's got your back, that has your best interests at heart. And they're like, hey, let's give these option sellers the metrics that they need so they can focus on the things that actually make them money. And to me, that was an eye opener when I saw all these metrics here, like, oh, the UI, oh, this. So I'm like, bro, you got to learn that these metrics are important to keep the plane in the air. You got to learn how to fly the plane. This is high level stuff. This isn't just, I need for the screenshots because I'm trying to go viral on X. Like, we're trying to make sure that, this account's at 600,000. So what's the objective for this account? To get it to 1 million. That is the intermediate objective. Within the next 6 months to a year, I got to get this account to $1 million. So we got to figure out how to get there, right? So we're sitting pretty good on BM&R. And I'm like, okay, well, been in this trade for 17 days. We got another 11 days. So call it a 30-day trade, a 28-day trade. And we're saving 98 cents from the cost basis. I'm like, well, I do that 4 or 5 more times. Boom. We've got a profitable campaign on BM&R. So I'm showing y'all how you can manufacture the win. Now let's go to MSTR. What's going on with MSTR? We've got an agreement to buy 2,500 shares at 140, and we've got an agreement to buy 5,000 shares at 160. So the 2,500 shares at 140 expire in 11 days. So we've got a very successful campaign there, right? We're already up $9,000, and we got $3,000 more of extrinsic value. Normally, I'd be like, oh, let me just close it off. Let me take the risk off the table. But because the bigger risk is down the road at $160, and those are barely out of the money, those barely went out of the money today, I'm like, I got to squeeze everything that I can out of this winning trade over here, because if I go over to the ordered chain, and I don't know if it'll give me that here, it may. If I go over to the ordered chain, strategy's been a losing campaign in this particular portfolio. Not because I bought some shares high and sold them low, but because it's taken all of these trades here to finally get to a situation where, like, okay, now I just got to wait it out. I feel like I can manufacture the win. But we're down $51,000 total on MSTR. So keep that in mind, right? So I'm like, of this extrinsic value, I got to squeeze out another 100 grand in order to have a very profitable campaign all the way around. And right here, I got a situation where I can make $12,000, $12,250. I'm like, I'm going to lock it in. I'm going to lock it in. The chances of MSTR expiring in the money are pretty slim, in my opinion. And if it gets challenged, well, I know that I could roll those out anyway. So I'm going to try to milk as much extrinsic value as I can. And if I go over here to the section where it says theta, this is theta per day. We're collecting $460 a day right now. That's going from the extrinsic value to the net liquidation value. So whenever you've got a situation where you're babysitting a campaign that isn't profitable right now, and you find yourself on the winning side of a trade, it would behoove you to milk as much of that extrinsic value as you can, especially if you're dealing with the strike price that you're very, very comfortable with. I don't know how else to say it to you guys. Early on in my career, I left so much money on the table, closing winning trades. Now, when I have a winning trade, I try to extract as much as I can if I am legit in a strike price. This is more so on short puts or cash secured puts. If I have a strike price where I'd be comfortable owning the shares, which in this case at 140 MSTR, sign me up, let's dance. It's hard to squeeze me out of that trade. So I'm like, I want to be in this trade for at least another week. And then I want this extrinsic value to be under $1,000. And then I will do two things. I will consider two things. One, just close the trade entirely and then dance with the, minimize the exposure, reduce the exposure to MSTR. Or roll it and bring in a shitload of premiums. So I could roll the expiration dates. Let me roll it 39 days out. That way we go get some of that easier money. And I could either keep it at 140 or I can maybe even lower it to 135 for a credit. So if I wanted to take some risk off the table, we're already going outside of the expected move here, right? We're already going outside of the expected move because this is the expected move. The copper strip right here is the expected move. Is that something that would interest me? Yeah, not really, not really. So I'm like, no, I've got a winning trade. I'm going to stay right here. PayPal. What's going on with PayPal? This is a huge position. This is an agreement to buy a crap load of shares of PayPal at $55. It's currently trading at 59. There's $47,000 of extrinsic value. Let's go look at the order chain and see what's going on with PayPal. So this is already a profitable campaign all the way around. So now it's like, okay, so we're legit in a position to make 48, 49 grand on PayPal if it just camps out for the next month and a half at over $55. I ain't doing anything with that trade. You got to learn how to get paid in this business. I'm in a situation where it's time to get paid. Found a winning trade. Now I'm going to squeeze all the juice out of all the blood out of that turnip, man. You got to squeeze. You got to squeeze the juice out of the orange. That's the objective. Imagine if you had all these oranges and you're trying to make freshly squeezed orange juice. And you're just doing a couple of squeezes, give me another orange. A couple of squeezes, give me another orange. Man, it's going to take a lot of oranges. Dude, you got a freaking orange. It's got a lot of juice in it. Squeeze the shit out of it. Get all the juice that you can out of it. That way it takes less orange to make your orange juice. So you're in a winning trade and you're comfortable with the strike price. Squeeze the juice out of the orange. It'll take less oranges to make your juice so you can have all the nutrition that you need for the day. So what I'm saying is we have a winning trade and you're not just cash grabbing. This is a campaign that you want to run for the next 3 to 5 years. You don't have to just be cash grabbing and getting that 40 or 50%. You can milk it to 70, 80, 90. You can let it expire worthless because you're okay taking ownership of PayPal at $55. That's where the mindset is so different. The paradigm shift is so different when you're dealing with the stock that you legitimately want to own at a price that you want to own it. My goodness, the world is your oyster if you would just play right there. But a lot of you guys want to play. Y'all have the shiny object syndrome. You're premium drunk. That is terminology we need for the book, guys. Premium drunk, because I say that a lot. You're getting premium drunk with all these options, but you don't actually want to own the underlying at some point. It's like, this is another terminology we need to add to the book, Manish. STD. Some of y'all guys act like you're going to come down with an STD, a sexually transmitted disease, if these shares get put on you. Like, you got to go to your local healthcare clinic. You don't know what to do. You know what I mean? I'm saying relax. You're in a winning trade. You're in a situation where you're comfortable. The market is not going to squeeze you out prematurely from a winning trade because it's not a trade, it's a campaign. And that's the difference in the mentality. It's just about everything that I'm in right now going into 2026 is a campaign. It's not a trade. So we are squeezing the $47,000 there. We're squeezing the $144,000 there. And on BM&R, what's the point of closing out these covered calls right now and giving $480 back when we have a losing campaign going right now and we need the shares to recover anyway? Now, one argument that you can make here, and I'm trying to give you all these perspectives, guys. There's a lot of teaching going on here. That's why I'm treating it like class, right? It's like options class. One argument that you can make that's very, very valid here is, well, I'm afraid that BM&R is going to go down, and then I'm going to lose my option to sell covered calls and get some decent premiums. Let me take advantage of this run up from Friday and now Monday, and let me roll this thing now and let me keep it at 42 bucks. But let me put the trade on for another 39 days. I'll leave it at 42 and I'll bring in another dollar in credit, or in this case, $2,000 in credit because it's 20 contracts. That's extremely valid too. I'm of the camp. This is where you always have to have an investment thesis with everything that you're doing whenever you're selling options. I'm of the camp that BM&R is going to continue to run and we're going to see 40 again pretty soon, like in the next week or two, leading into the January the 15th Alchemy of 5% meetup in Vegas, right? The investor day. So I think BM&R is going to pump a little bit. So I'm like, the easiest way to recover when you're underwater on some shares is just let the shares run. So I'm like, I don't want to be tied to covered calls 39 days from now. Let me just rock with these at 42 and then I'll reassess. And if it's trading at 40, 41, and if I feel like this thing will pump more before it dumps again or whatever the case may be, then maybe I'm like, okay, well, then I'll, instead of picking up a couple $1,000s here and I sell covered calls in 7 to 10 days, maybe I pick up $3,000 or $4,000 if I want to stay in the campaign long term. So to me, just waiting it out sometimes is the best move, but that's also the hardest thing for a lot of people. So this one all looks real good. Now let's look at the short strangle on Palantir. We've got an agreement to buy 5,000 shares of Palantir at 140, while also having an agreement to sell 5,000 shares of Palantir at 260. So that's a sweet spot trade. That is what's called a short strangle, where you have an agreement to buy shares via a short put, and you've got an agreement to sell shares via a short call. So you essentially need those. It's like a goalpost trade. So you essentially need Palantir hanging out between, or your stock, whatever the stock is, between the two goalposts. So in this case, 140 and 260 is the sweet spot. I think we can agree that 174 is pretty comfortable in between those goalposts. It's a little bit closer to the 140 than it is to the 160. And that's why you can see that the 140 is actually in red. But the 260 is comfortably in the green, up $8,100 with $6,700 left of extrinsic value. And you've got $23,000 left of extrinsic value on the short puts. And it's all extrinsic value because both of these options are out of the money. So this is where I look at the order chain and I'm like, oh, is Palantir making money? What's the campaign look like? So I just, again, this thing's beautiful because it does what? The accounting for you, right? So I'm going to do this one 365 days to make sure we're getting accurate data here. We've done quite a bit of trades with Palantir there, as you guys can see. But the total profit and loss isn't changing, right? So it's valid. We're up 50 grand on Palantir already, and we got $29,000 in meat on the bone. Now, the one thing that I could consider doing is I'm like, hey, these 260s aren't really doing anything. They're way out of the money, and we're not really collecting a lot of data. We're collecting $209 of data there. It's a very, very low delta. Maybe I roll those down to 240 and squeeze more juice out of the orange, because I'm like, I don't think it's going to get to 260. Truth be told, I don't think it's going to get to 240 either. So that's something that is a consideration, is just roll the strike down, tighten it up a little bit, kind of get more delta neutral in the position. So we can go from 260 to 240, and they would pay us a credit for that. Another $5,000, increase our strike to lower our strike from 260 to 240, get $5,000 in credit, increase our buying power. I'm looking at the metrics on the bottom right. Increase our buying power by $3,700. That's not a horrible idea, that is definitely something worth considering. So I know that Palantir does well during the war games, right? Whenever the world's not good, Palantir does well. Another thing that is also uh, would be a valid idea, in my opinion, is just close this part of the trade completely. Be like, yeah, I'm going to take that part of the risk off the table. I'm no longer getting paid sufficiently to take on that kind of risk. I'm just going to give you back $6,700. If Palantir pumps to 185 or 190, then I'll put the trade on again, and you're going to pay me a lot more than the $6,700 that I paid to close it. That's another option as well. I'm going to opt for doing nothing right now, but the one that I'm leaning towards is going from 260 to 240. But I'm going to see what it looks like on a larger scale because I have this trade on a couple more times. So let me get back over to you guys and let's do some live Q&A, and we will get back on this thing. So let me see, how can I take this particular? There we go. Okay, where are we at here? First time viewer, awesome, man. I appreciate you. Appreciate you. We got 40 people rocking with me live on YouTube. We got 710 people rocking with me from X. Been live for 46. Let me know if y'all like the format. Like, this is essentially you just rolled into options 101 and the professor's trading live for you. The objective is for me to show you guys how I make money in the stock market. Selling options live. That's what we do here. Can I ask you a question regarding my situation of leap call and BM&R? Put it in the chat and we'll get to it. Doing cover calls on green positions feels so funny too. It's just amazing. Currently have a $50,000 portfolio, need a 5X, right on. Hopefully we'll have a 250 account in 3 years. That's my target, right on. Hey, TJ, thank you for the info. Doubled my account last year. Man, good for you. No, it's not 29 was. I don't know. I don't know what that is. What about losing MSTR trade, that pyramid scheme of con artist company? Morning all. The beautiful thing about the stock market nostalgia is there's 10,000 tickers out there, man. Sell options on one that you believe in. Good morning, everyone. I get to watch what's going on, Pastor. Just an idea, TJ. I'm doing this right now, and I've already been collecting premiums for a year. GME has cash or cash equivalents roughly equal to its current market value. The company is growing EPS each quarter. Yeah, I've just never been on the GameStop train. I know that Cohen is running it now, I believe. Is that his name? Cohen? Um, Again, you got to find a stock that you want to own. That's like the number one rule is you got to find a stock that I want to own. And there's just not a price that I want to own GameStop in. But if it's one that's working for you and you see a path to profitability, a way to manufacture the win, this isn't the channel where we shit on people's dreams, right? This isn't the channel where we tell you your girlfriend's ugly. Nobody wants to hear their girlfriend's ugly. And I look at the stock as like your girlfriend, right? So I'm like, if you think you can make money with GameStop, by all means, by all means. I just like with any other stock, just be careful. Just be careful. Appreciate you. How do you feel about the dilution 50 build or something? The dilution. Oh man. I think it's very, very aggressive. I think again, this is just me inferring and speculating because I don't know Tom Lee personally. But I think he has a vision, a 5-10 year vision for BM&R. And he's basically like, this is how many shares it's going to take to realize that vision, to make it come to fruition. So we're just going to ask for it. we're just going to ask for 50 billion shares because that's what it's going to take, because we're going to keep doing some splits and all that other stuff to make sure that we keep the stock price at about 25, 30 bucks, because that's a sweet spot to where a lot of people can, want to trade the stock, because if this thing shoots up to 2 or 3, 4, 500 bucks, a lot less people are going to be able to sell options on it, because now it's going to require a bigger account and stuff. So I think those are the reasons that he wants 50 billion shares. It's not just, hey, I'm going to be very, very responsible with y'all's money. And the only part that's a little bit tough for me, a little suspect, if you will, is that $95 million payday for Tom Lee. I want to see more shareholder alignment. I want to be like, I want to feel like we're on the same team here. That makes sense. So I'm giving him the benefit of the doubt and the doubt of the benefit. That makes sense. I voted yes. For the extra shares, the shelf offering, if you will. And that doesn't mean that he's going to use all 50 billion shares right away. So keep that in mind. Love it. It's like following a campaign you started, more personable, which you can relate more. Morning, TJA. What's going on, Angel? Love your content, and live trading is great. Learning a ton from you. I have BM&R 35 call 2027, paid 3.5, losing money right now because of the dip in BM&R. But what are your thoughts? I think BM&R is going to do very, very well. I like that you have all the way till 2027 on those. So I think it's going to be a very, very big year for Ethereum and BM&R. So I think you're in a good spot. Anyway, we're all caught up. Let's keep it going. So that's what's going on with this particular portfolio. I feel pretty good about it. Let's go over here. Let's go with the count ending in 390. This is about a $350,000 account. 3 positions. Let me say it closely for the people in the back of the class. $350,000 account, 3 positions. Let's talk about those 3 positions. We got days to expiration. So we got BM&U. We got 10,000 shares of BM&U at 550 with an adjusted cost basis of 441. So we're doing pretty good there. But we do have an agreement to buy 10,000 more shares at $7. Y'all seen a theme here? It's a lot of the same positions across the board. And we're running an aggressive cover call campaign at $8. So I feel pretty good about it. It can't be below 7 and above 8. So something's going to happen here. What's the sweet spot between 7 and 8? 770, 780? 11 days from now would be pretty awesome for this particular account. We'd have a nice winning trade on BM&R. Let's go look at the order chain to make sure that's real. So we're down a little bit overall, $7,700. So we got a little work to do here. So we've got I don't know. Oh, here we go. So we're losing a little bit on these $7 puts here. So hopefully those turn around a little bit. And then this cover call works out. Everything works out. We got paid about $3,200, $3,100 there, right? 31 times 100, 31 cents times 100. So we got paid $3,100 there. Feel good about it. I think that we'll definitely manufacture the win. What's going on with PayPal? We got an agreement to buy a lot of shares of PayPal at $55 with $30,000 of extrinsic value. Let's go look at the order chain. We got a profitable campaign on PayPal going with $30,000 of extrinsic value. We're not going to do anything. MSTR, this is a losing trade. I know it's winning here, but it's a losing campaign. So we finally got a situation to where now we can write it out a little bit. We're just going to chill. We got $70,000 of extrinsic value there. Let's see how much we're down on MSTR. We're down to $8,000 total, $8,700. So we got some work to do. So we need to collect some of this data. It's not much, $227 a day. But, there's a situation here where I can maybe consider selling some naked calls on MSTR and bring some money through the door. That way we got some buying power here. We're doing okay. Here. So I'm going to look for a situation to deploy some capital here. I don't want to sell any naked calls on PayPal. I feel like PayPal is a ticking time bomb to the upside. Maybe revisit SoFi or something whenever we get to a portfolio that has SoFi in it. And maybe SoFi would look pretty good over here in this particular portfolio. I'll find something, but I'm definitely going to try to get another position going over here. And this account has got to, looking for a trade, right? We're always looking for a trade. Let's keep it going. Account ending in 01. This is a $860,000 account. Looking at it where it is today, yeah, it's about an $860,000 account. 4 positions. Listen to what I just said, guys. It's almost $1 million account, and there's 4 positions. So whenever I tell you guys that I think some of y'all have too many positions, I mean it. Y'all are working too hard for too little. So let's see what's going on with this particular account. We got the days to expiration all set up. Let's look at MSTR. We got an agreement to buy 5,000 shares of MSTR at 140. Up 6,500 on the day, 6,000 of extrinsic. Let's look at the order chain. So we got an issue here because we're down some money on MSTR. So we're going to stay in this campaign over and over until we manufacture the win. So we're going to be in this thing. We're going to roll this position out eventually. We're going to milk some more of this data. It's about $900 a day. So we're going to try to see this through for another 3, 4, 5 days, maybe even longer if it's very, very comfortable here. And then we'll look to roll it again. And we'll look to roll it probably to the 39-day cycle. And we'll probably stay right there at 140 and bring in some more money through the door. Another 20 grand. So that gets us closer to even on the campaign. And again, 140 is very, very comfortable for us. So it's going to be very, very hard to squeeze me out of that particular position. BMU, 20,000 shares at 565. But we also have an agreement to buy 10,000 shares at $8. So that part's problematic. Let's look at the order chain. We're about break even on BMU. We've obviously got a profitable campaign going here on the actual shares. So I could sell these shares right now and flip the script, turn it into a positive trade. Or maybe I could put the shares for sale. Maybe bring some money through the door, take advantage of this nice uptick, put the shares for sale at say $9. That's probably a good idea, actually. So January the 11th. I'm surprised that this copper strip's so small. So right here, it shows you where we have the shares, right? So I put the shares for sale at say $9. And we have how many shares? So that'd be 200 contracts, I believe. Put it here at the mid, review, bring in $4,300 for agreeing to sell these shares at $9. Sign me up. So now we'll let it cook. I'm not gonna down tick it and be like, oh, just give me $200 less. I just want to put the trade on. I'm like, no, I didn't have any cover calls on. So I'm going to fight to try to get our price. So what would need to happen for these to fill is BMing, you would probably have to spike up to like 655 or something like that. It was at 660 something earlier, right on the stream. So that's a nice payday right there. That's a nice payday. Agree to sell them at 9, and then it's going to become a mutually exclusive thing, right? It can't be below 8 and above 9 at the same time. So I feel pretty good about it. And then this also lowers the cost basis for the campaign, because I'm taking into account, like I'm assuming that we're going to have to take ownership at $8. And notice I haven't said anything about rolling these puts that are in the money, because I'm like, I just take ownership. I just take ownership and sell covered calls. If I take ownership at 8, I'll sell covered calls at 8. So I'm not acting like I'm going to come down with an STD, sexually transmitted disease. We need that for the book, Manish. We need that for the book, man. We're not acting like we're going to come down with the sexually transmitted disease. It'll be okay. It's going to be okay. We take assignment. Let's look at PayPal. What's going on with PayPal? We got an agreement to buy a crap load of shares at $55 with $46,000 of extrinsic value. We've already got a profitable campaign going with PayPal. We're chilling. Let's go look at Palantir. Again, $850,000 portfolio, 4 positions. What are you guys doing? What are you guys doing? I have these FaceTimes with y'all over and over and over again. Some of y'all have like $60,000 portfolios and y'all got like 25 positions. Like, what are you doing? Like, what are you doing? Like, go research 1 or 2 or 3 of these stocks and let's figure out how to manufacture the win. Like you're making a hard game harder. I mean, if you want an ETF, freaking invest in an ETF. Like, what are you doing? It's crazy to me. It's absolutely crazy to me. I hope if there's one teaching segment y'all get from class today, is that maybe I have too many positions on. There's no maybe. It's definitely. You remember that movie? Definitely, maybe. Ryan Reynolds. Good movie. Watch it. Chick flick. Your wife will like it. So we got a sweet spot trade here. Goalpost trade. 142.60. Looking pretty good. Looking pretty good. Let's go see if Palantir's made any money in this account. Well, looky here, 149,000. With another $29,000 of meat on the bone, I could make an argument that maybe just give $6,500 back, take this one off the table, squeeze more money out of it, roll from 260 to 240. Those are all options. Those are all options. But right now, I'm just going to stand. We're just going to stay down, stand down. Less is more. We're in a winning trade. It's comfortable. I want to see how MSTR plays out. I want to see how BMU plays out. Look, BMU spiked a little bit. So this thing should be filling here pretty soon. This should be filling pretty soon. So I feel good about it. Is there another trade that I can put on that would look good? That would look good, right? Got to find your 5. That's definitely something that I'll consider for this particular portfolio. I just got to let this MSTR thing play out. Got to put the trade on one more time so that I know that we're going to have a profitable campaign once that all plays out. And then I'll be like, okay, I'll deploy more resources, because I look at this money. It's like, it's your battlefield, right? It's your war chest. It's your soldiers. It's your cavalry. And you have battles that you're already fighting. Each one of these positions is a battle. And I feel like some of you guys deploy soldiers too quickly, which is your money, your dry powder. And then eventually, if you have a position that goes against you in a pretty big way, you no longer have any dry powder to help get you out of that jam. We're in the money business, guys. You gotta be mindful of that. You have to be mindful of that. Some of you guys are deploying money way too quickly, way too quickly. So I think we're good here. Let's keep it going. Account ending in 33. This is a $740,000 account. 4 positions. Y'all seen a theme here? The professor's not lying to you guys. I'm telling y'all. Y'all have way too many positions. It doesn't take that many positions to make a bunch of money. This diversification and all this other stuff. Do you want diversification? Invest in freaking Qs. Invest in the SPY. Like, what are you doing? Pick a stock that you believe in. manufacture the win. It's a hell of a lot easier. So let's keep it going here. We got BM&U. What's going on, BM&U? 10,000 shares at 656. Okay. But we got an agreement to buy 20,000 shares at $7. So that one's a little bit problematic. Let's look at the order chain. How bad is it? It's not too bad. Down $5,900 collectively. We can definitely manufacture the win here. But the good news is we're not just sitting on our thumbs here. We're not just sitting on our hands. We're collecting some premium on those calls because we don't have the best entry point at 656. You all saw another one that was in the fives, right? So we got these shares for sale at $9, and we got these shares for sale at $11. You could make an argument that there's just no juice in the tournament. There's no juice in the orange. These give $200 away, $200 and close it out. That's a fair argument. That's a fair point. But it's also $200. And I'm like, I'd also be okay selling these damn shares at 11. So why am I going to give that money back? Am I going to roll from 11 to 9 to make a little bit of money? That's something that I could consider doing, right? I could roll these strikes down. I could roll it and match it. Would they pay me for that? I mean, is it worth it? Would they pay me $330? That's something worth considering. Or if it does a moonshot, I'd rather get that extra $2 of capital appreciation and I just do nothing. I just do nothing. So I think I'm just going to opt for doing nothing right now. We'll see what happens. I still haven't seen what I think that Tom Lee was on Squawk Box this morning. I was sleeping, so I'm going to have to go find those videos and see what he says, all that stuff. Is he even going to be in Vegas? Because I have my tickets and it says it's like a virtual meeting. So I'm not sure. I'm not sure. PayPal. We're gonna buy a crap load of PayPal at $55. Is PayPal a profitable venture? Let's see. I'd say so. 150 grand to the good. It ain't PayPal over here, guys. You just gotta learn how to make money on the stock, right? The stock's the horse. You're the jockey. Some of y'all suck at being jockeys. There's a lot of money to be made with PayPal. You just got to figure out how to do it. This thing's been in a sweet spot for us for like 2 years. It's just been an absolute blessing, man. If all of the stocks could be like PayPal, the account would be worth an extra $15 million collectively. But they're not all like PayPal. PayPal's range bound, not great premiums, but since we moved over to Tasty Trade, great premiums for us, right? Because it's a lot more capital efficient. I mean, just look at this. Look at the capital efficiency, guys. My goodness. 300 contracts with $134,000 of capital requirement. Go try doing that on your pretty little Robinhood app. And let me know how it goes. Let's see how much money that would take on Robinhood. 5,500 times 300. Let me know how that works out when you got to go tie up $1.65 million on Robinhood to make the same premiums. I'm over here making this trade for $134,000. Oh, but you got pretty screenshots. You got a beautiful user interface. Let me know how much money that makes for you. I ain't talking shit about Robinhood. I'm just spitting the facts. Until they come correct with portfolio margin and limited trading authorizations. Robinhood is never going to light a candle to a brokerage like Interactive Brokers or PayPal or Charles Schwab. Like, who are we kidding here? A very, very serious trader is not going to waste their time trading on Robinhood because it's costing them money. The best thing that ever happened to me in my career is when I got kicked off of that platform. That's the best thing that ever happened to me in my trading career is when we got kicked off of the Robinhood platform. So I was like, fantastic. Well, you're just forcing me to go make more money. Thanks, Vlad. Appreciate you, man. I owe that guy dinner. So MSTR. We got short puts at 130, 75 of them. And we got short puts at 160, 25 of those. I think this might be a losing campaign. So let me see. Oh, it's a winning campaign. Okay. Well, shit. And we got $89,000 of extrinsic value. I mean, this thing's about to be looking like PayPal here pretty soon. They ain't going to squeeze me out of that trade right there. I'm going to get that money. That $28,000, it's mine. It's ours. And I'm not going to give that money back. I'm not going to give that money back because this is a campaign. This is not a trade. I want to be in this thing for the next 3 to 5 years. So if this thing starts plummeting to 130, awesome. I'll roll it then. I'll roll it then and I'll keep doing it for 3 to 5 years because I feel like there's a lot of money to be made with this stock in these ranges. So I'm hoping for 130 to 200 price range for the next year or two. That'd be the easiest money on Wall Street. Palantir, another sweet spot trade, 140, 260. $29,000 of extrinsic value on a sleep easy trade. Let's go look at the order chain. Made any money on Palantir? I'd say so. 78 grand. 4 positions, guys. 4 positions. $740,000, $50,000 account. What are you guys doing? What are you guys doing with all of these crazy ass positions? Do you just want to have to work that hard? I don't, like, help me to understand. Help me to understand. I'm going to go through a couple more of these portfolios and then we'll finish with the big account. But in the comment, help me to understand, what is your justification for having, some of y'all have hundreds of positions, and I'm just, help me to understand. Like, help me to understand, because that's not, you don't need that many positions to make a shitload of money. Like, just help me to understand. You should read it in a book somewhere that no more than 1% or 5% to one position. And like, I'm just like, how did it happen? Because how could you possibly follow that many earnings reports? Like, to me, it's like having best friends, right? Like, you can have maybe 5, 10 really, really good friends. I mean, you can't be best friends with everyone. My buddy Greg used to say it all the time. You got to go find your 5 in life. You got to go find 5 people to go do life with if you want to win big. Brother, you're going to have to go find 5 people to go do life with if you want to win big. You can't be best friends with everyone. And y'all are acting like y'all have that kind of time on your hands to go be best friends with all these stocks, follow all these earnings reports. Man, that's like, I ain't got that kind of time or energy. That's crazy. 60 is the big account. We're going to go into another $1 million account here. This is about almost 1.1 million. And this is account ending in 20. This is called the Star Trader account. 1, 2, 3, 4, 5, 6. 6 positions, $1.1 million account, 6 positions. Let's look. What's going on here? MSTR, an agreement to buy 10,000 shares of MSTR at 140. $11,000 of extrinsic. Losing a little bit of money on MSTR. So I'm like, we're going to stay in this trade. This is a campaign. We're going to stay in this trade. By now, y'all should already know what I'm going to say. And that's the whole purpose of this thing, is you got to be consistent with your approach. Oh, I'm loving what I'm seeing right now to SoFi. Let me use my late night DJ TJ voice. SoFi, talk dirty to me, baby. Pinche puta. We're going to have fun on these lives, guys. Welcome to 2026. We're going to have fun. I mean, you ain't having fun doing what you're doing. Why are you doing it? That's a quote for the book, Manish. If you ain't having fun doing what you're doing, why are you doing it? Why? Why are you doing it? It should be fun for you. You should be waking up on Monday morning. This is different than any other career out there. You should be freaking excited about it. You should be excited about it. You can't contain yourself. It's Monday morning. Let's go make money. Money makers Monday, baby. My goodness. So what's going on with MSTR? We're chilling. We already did this one, right? So now we got to go. Are we on the right one? Yeah, we're on the right one. We're on 20. Okay. MSTR, crushing it. PayPal. What's going on with PayPal? We got 46,000 of extrinsic. We got an agreement to buy a crap load of shares over here at $55 using $135,000 in capital. $1.65 million will be the capital requirement on Robinhood. What are we even talking about here? If your account is over $175,000 and you're on Robinhood, guys, I'm just going to tell it to you straight. It's costing you a shitload of money. What are you doing? Like, what are you doing? SoFi. We got an agreement to buy 20,000 shares of SoFi at $26. Has SoFi made any money in this account? $500,000. Again, you want to make big money? Learn everything you can about a few stocks and go sell puts and calls. Roll when it makes dollars and cents. Buy the timely leap. Do your spreads, whatever you got to do, synthetic longs, whatever you got to do. Figure out how to manufacture the win. But you guys are doing the whole, this is your magnifying glass. This is your magnifying glass here. The sun's shining bright, but it can't do shit because you won't stop moving. Give it time to cook. Give it time to cook. So I sell puts and I sell calls on the same stocks over and over and over and over again because I like making money. Give me a thumbs up if you like making money. If you like making money, why are you selling options like you don't like to make money? I don't understand. Help me help you, like Jerry Maguire. Like, help me to understand because I want to help you. I want to help you in 2026. I want to help you realize all your dreams. I don't know that the why is going to give me permission to keep going past this. I really think that 2026 is it for us and our little community here on YouTube. She might allow me to do some members only stuff here and there. I'm pretty damn sure FaceTimes are done after 2026 because I had to plead with her to keep them going for this year. I doubt that she's going to be okay with me doing it next year. I highly, highly doubt it. So take advantage of me, use me, and abuse me while you got me because I ain't going to be here forever because we're ready to live our best life. That's just the reality of it. Palantir, 142.60. Another sweet spot trade. Have we made any money with Palantir over here? $97,000. You don't need a lot of stocks to make money. You just got to learn how to sell options, how to manufacture the wins on the stocks that you're in. A lot of you guys have winning portfolios already. You have winning stocks already. You have the right stocks. You just got to learn how to jockey that stock. You got to learn how to ride that stock to the winner's circle. End phase, 200 contracts at $25, $73,000 of extrinsic value. 375 days from now, it's a backstop trade. Have we made any money with end phase? A little bit, 38 grand, nothing to sneeze at. And then we got our little flyer bet over here, BMU, 10,000 shares at 559. There's nothing to show because all I've done is buy the shares. That's it. There's no options. So I'm like, okay, so I got squatters. We don't like squatters in this account. We don't like squatters. It's time to pay some rent. So I'm thinking that $9 is the one that really, really resonated with me. So $9, 7 days from now. So we go over here to the bid sell. And how many shares do we own? So it's 100 contracts. I'm going to put it in the mid. 22. Review send. Give me a cool 2200. 2177.29. Increase our buying power by 300. Submit that shit. Let's go. We can't have any squatters here, especially not on a leveraged ETF. No bueno. No bueno. No bueno. That's all of them. We already did the little account. So now we'll go to the big Papa account. But before we do that, a word from our sponsors. Just kidding. We don't have sponsors here. We don't need any. Let's keep it going. Let's keep it going. Where are we at here? You're welcome. Love the content. Appreciate you. If you have one to pick one stock this year to roll, what would it be? I'm struggling to find right now, man. Before this run up, I was going to tell you SoFi. I think SoFi is going to see $45 this year, maybe 50. Man, that's tough. If I had to just roll with one, and you have moderate risk tolerance, you have a pretty decent account size, the highest risk reward, the the most asymmetric bet in the stock market right now is probably PayPal, because I feel like the floor is here, but the ceiling could be way up here. So I would say PayPal. If I had to just rock with one, and I wanted to learn how to golf, I want to spend time with my wife. We're going to go visit 4 or 5 countries this year. We're not going to visit that many, but I'm just saying if we were, and I want to still make money, the premiums aren't going to be as high, but the capital requirements are pretty low, and it's going to be very, very low stress, because even if it comes down to our strike price and we have to own the shares, it's PayPal. They're buying back the float. They're not going out of business. I would have to rock with PayPal. Aaron, what's going on? TJ, look at the second at Lemonade, January 15 put. Is it close to 2005 possible profit on Tasty? Lemonade. I'll look at Lemonade. I think it's an insurance company. A lot. A lot. Hamburger stand only needs burgers, fries, and drinks. I'm telling you, man. I'm confused the difference of Robinhood margin versus Tasty margin. It's just major league stuff. When you have portfolio margin, it's a game changer. But you gotta know what you're doing, man. They give you a lot of rope. You have too much excess rope, you can hang yourself, right? So be careful. I'm trying to get through this, guys. Trying to get through this. Maybe. TJ, I'm 30. My net worth, man, good for you. Wow, you're crushing it. 1.1 in house equity. I've made all my money on stocks. What about yours? I want to have a big portfolio like one day. About 3 times that, I guess, 4 times that. I don't have house equity though, so you're killing me on the house equity. Got rid of so many tickers. Best decision I ever made. I get so excited seeing your portfolio and see you make progress. Everybody's just got to run their own race, man. Comparison is the thief of joy. God has you there for whatever reasons. At the end of the day, it all belongs to God, right? So we all have to be good stewards with our money. So anyway, what I want to do is I want to practice something here and see if I'm going to stop the screen. So then I'm going to do here, we're going to share the screen, but we're going to share a window only, because I think that's what it takes whenever you want to watch like another channel, right? So I'm just going to practice here. So we're going to go over to YouTube and just let me know if y'all can hear volume. So here's a mid. Let me know if y'all can hear it. Let me know if you guys can hear that. This y'all couldn't hear the volume whenever I was trying to stream an earnings call. So give me just type in I can hear it. Okay. So type in. So there is no volume. Wonder why that is. No volume. Okay, we're going to try it again then. So we're going to remove that. We're going to go present, stop screen. Okay, so we're going to present, share the screen. We're going to do the entire tab. Oh, there we go. There we go. So this, let me know if this works. Allow. Okay. So let me know if that works. Give me a second. I said I wasn't sharing with volume. So let's find a mid again. Where's a mid? Where'd you go, mid? Would I just type in a mid over here or what? Where's the mid? A-M-I-T, A-M-I-T. There we go.
I mean, it's kind of what geopolitical instability. Bitcoin hasn't
Holy
been making
cow,
a move on that stuff.
really
over
at
the past 7 months,
93,000?
but this time it became different.
Let me know if y'all can hear that.
And if this holds, then this was one of the catalysts that got it to happen. Hit 94 exactly on Binance. Well, it would be nice if we could break, dude.
All right. Now you can hear? There we go. Awesome. Okay. I just want to learn how to do it. Awesome. Got it. Awesome. Appreciate you guys. We're learning, right? It's day one of class. Give the professor time. Still got to get my office aides going. Hey, Alex, now that you're here, any trades that I made, try to clip those. That way we have, and do like, I don't know, something on the YouTube thing, like live trades or something like that way people can just go find those, because a lot of people are just here for the trades, and that's okay. All right, let's keep it going. Appreciate you guys. All right, we're on 11 days. So what do I got to do here? There we go. So you guys should be able to see that. We're having ourselves a day. We are having ourselves a day, up another $899,000 for the day. Let's go. SoFi talking dirty to me. Pinche puta, bonita, masota. All right, let's go. What's going on with MSTR? This has just been an absolute loser of a trade, but we're going to turn it around. So we got a short strangle going here. It's a sweet spot trade, gold pulse trade, right between 150 and 180. She stays there. We've got $177,600 that we can extract. But we look at the order chain here. We're down a lot, guys. $721,000. So we got some ground to make up on SoFi, right? So I'm going to try to milk all of this money that we can on the 150 puts, and then I'm babysitting the 180 calls, because this is an agreement to buy 30,000 shares of MSTR at 150, and this is an agreement to sell 30,000 shares at 180, but we don't own any of these shares, so I have to be mindful of that. So the idea is to stay in this trade as long as we can, because we're collecting about $16,000 of data here. If you go over to the right-hand side and you see the data, that's how much time is coming off the clock. And we want to, as long as it stays in our sweet spot, you got to be comfortable being next to the fire in this business if you want to really, really get ahead eventually. So I'm like, this is like literally right in our sweet spot right now. It is literally right in our sweet spot. It's almost just as close to 150 as it is to 180, but we know that the unlimited risk is always what? To the upside. So what would be the game if this thing shoots up? What would be the game? It would be obviously to do one or two things. One, just take our medicine and close the calls out. That's one option. We're not going to take that option though. Why? Because we got an agreement to buy a crap load of shares at 170. So what we could do is we could roll this thing out 39 days and go from like 180 to 190, or maybe even 200, and bring in another $30,000. And this is what happens if MSTR keeps going up. Then that means that we're making all of that money over here on the 150 puts. And that means that these 170 puts that are in the money, they would now be out of the money. And we still got $2 million of extrinsic value there that we can extract. And eventually that negative will turn to positive. So we're going to manufacture the win here. We just need MSTR to manufacture the win. What do we need? It could just literally stay right there. It wouldn't hurt my feelings if this thing spiked up to 200 tomorrow, though, because I would roll the 180 calls for a minus, but then we're going to be up like $500,000 more on the puts. So it's just like, I don't have to cheer against this stock because of the way that it's weighted, right? It's almost 3-to-1. A little over 3-to-1. We have 1,000 puts versus 300 calls. So when you have a stock that you feel is like a ticking time bomb, but you want to sell naked calls, you might want to consider a ratio of 2 to 3-to-1 on the puts versus the calls. If you have a stock that you feel like the risk is a lot more to the downside than the upside, then you might want to have a ratio of 2 to 3 calls versus 1 put. That makes sense. BMU. What's going on with BMU? Order chain down $147,000. Before we started this latest campaign, we were up 100 grand on BMU. What happened? Well, now I think if I close this out, we'd actually be winning money, but we'd be making money. So we got an agreement to sell these shares. We don't have an agreement to sell these shares. We've got squatters right now. We got an agreement to buy 100,000 shares at $8. So that's problematic. And we have 150,000 shares that are unencumbered. So I'm like, I need to sell some covered calls at $9. So I'm going to go over here. I'm going to put these shares for sale at $9. And I want to get paid right in the middle, and it's 1,500 contracts, right? 1,500 contracts, review and send, $33,000. We take these shares off my hands at $9. I don't care if it runs to 11, 12, 13 bucks. I don't care. I'm like, okay, cool. Is $33,000 sufficient enough to put a cap on those gains? That's what it comes down to. That's what it comes down to. You see, and this is where the mindset changes a little bit when you're dealing with such high volume. So the reason that it makes sense is because I have a BM&R position over here that we're down $1.5 million on. So this is like I'm playing this trade in tandem. The BMNU, I'm kind of playing it with BM&R. And I have all of these shares on BM&R that are unencumbered. I don't want to sell covered calls on BM&R right now because the juice really isn't worth the squeeze because we're so underwater on the actual shares. So because I want to let those shares recover, I can't be running this. I can't have the same mindset on a leveraged ETF. So I think that it would be a little bit irresponsible for me not to bring in another $30,000 of premiums here. So I'm going to go ahead and do that. And again, I don't give a shit if this thing runs because I still got money that I'm making over here on the puts. I still got money that I'm making over here on the puts. So I think it'll be okay. I think it'll be okay. And if these shares get called away, it's trading at 9 or 10 or 11. I sold them at 9. I'm not going to lose a lot of sleep over that, guys. I'm just not. So I want to bring that money through the door. So I want to go here. I want to go 1,500 contracts. I want to put it at 22. Review and send. That's $200 in fees, right? It's a lot. It's a lot. So we're going to hit submit. We're going to hit submit and we wait. We wait. So it either gives us our price or it doesn't give us our price, right? Palantir. What's going on with Palantir? So we got another sweet spot trade. We got an agreement to buy shares, 70,000 shares at 140, while having an agreement to sell 70,000 shares at 260. Same exact trade that y'all have seen across the board, utilizing $488,000 in capital requirement. Guys, let's just do the math here for a second. So we got 70,000 shares at 140. It's $9.8 million in capital. That's what it would take. Just for this right here. That's what it would take. $9.8 million in capital to sell this trade on Robinhood to bring in the exact same premiums right now. I'm able to sell both sides for $488,000 in capital, and I got $397,600 in extrinsic value. It's just way more capital efficient to be on the Tasty Trade platform than it is Robinhood for us. It's just a no-brainer. What's going on with Apple? We got a sweet spot trade, an agreement to buy shares at 220 while having an agreement to sell shares at 360, $71,000 of extrinsic value there. This is a trade that I want to make a lot larger. I just got to wait for MSTR to kind of work out. Because once I take this trade off the table and it works out, de-risk a little bit from MSTR, I'm going to be loading the boat up to 250 contracts on both Apple and Google. Why? Because I took losses on these last year, 1.5 million on Google. I logged in some losses to help me offset some capital gains, and then on Apple it was the same thing. It was bad. It was 1.3, so $2.8 million. So I was like, okay, cool. In 2026, my objective is to make all of that money back on Apple and Google running very wide strangles. So these are again 228 days out. So eventually these will probably be 500 contracts each. And I want to keep doing it over and over and over again. And in the next 2 or 3 years, bring all of that money back through the door, log the win. And then now I've got a profitable campaign by 2028, 2029. I'll have a profitable campaign on Apple and Google, and I'll have a money printer going forward. PayPal, what's going on with PayPal? We've got $834,000 of extrinsic value. We've got an agreement to buy 200,000 shares of PayPal at $50. Let's see if we've made any money on PayPal before. A little bit on this one, 279,000. We made a lot of money on PayPal on Robinhood platform. Enphase, we got an agreement to buy 100,000 shares of Enphase at $25, 347 days from now. And let's see if we made any money on Enphase. A little bit, 381,000. Now let's look at SoFi. We've got an agreement. This is our little backstop trade, right? We just put these on 7 days ago. Wish I'd have put on more contracts now, but we got an agreement to buy 100,000 shares of SoFi at $22, right? Let's see if we made any money with SoFi on this channel. Yeah, I'd say so, right? $3 million on this particular brokerage here. And then this is our losing trade right here. Right, we've got 100,000 shares at 44.09. And then we've got these leaps that we're absolutely underwater on as well. And if we look at the order chain here, we're down, $745,000 collectively. The reason that it's not as high is because I have run a couple of successful cover call campaigns on BMNR. And then we got ASST. This is our moonshot play right here. This is our moonshot play. It's trading at $1. We got 250,000 shares at 137. So we're down quite a bit on those. And we're just about even on the leaps. We're just about even on the leaps, guys. So that's interesting. That's interesting. So I asked myself, is there a better place for me to put this money? These leaps here. Is there a better place for me to put that money? That's the question. Like, would I have been better off owning more shares of BM&R because I could sell cover calls on those? Or am I just going to moonshot this thing? So right now I'm opting to moonshot. Unless this thing gets to maybe like a $50,000 profit or something like that, I'm just going to leave it alone. Like, this is literally a moonshot play. I'm not saying that I want the shares to go to zero. Nobody does. But I mean, if it did go to zero, like, it really wouldn't bother me that much. I'm like, I fucking tried. It didn't work out. Right. So SoFi, what's going on with SoFi? What are we looking to do with SoFi now? Could potentially look to sell some shorter dated naked calls on SoFi. I'd probably pick that $36 price range. I feel like SoFi is going to run going into earnings. So let's just look at it. So I think their earnings are going to be right around this day right here. January the 30th. So let's just look at that. Yeah, something like that. Just not really paying me a whole lot. I mean, maybe over here at 34. I wouldn't do I would do maybe 500 contracts. Something like that. I mean, it's 28 grand. It's nothing to sneeze at. It's nothing to sneeze at. It just doesn't have me that excited yet. It just doesn't have me that excited yet. The IV ranks at 17.9. It's just, I feel like the premiums are a little bit light. I feel like the premiums are a little bit light right now on that. In phase, is there any naked calls that I could potentially sell in end phase? I just don't see. I don't feel real comfortable with that. I certainly don't want to sell any naked calls on PayPal. I feel like PayPal is a ticking time bomb. What about this Palantir trade? Is there anything that I could do here to make it a little bit more delta neutral? I think this one would be the guinea pig. I think going from 260 to 240 here does make a lot of sense. So I could definitely look to roll down from 260 to 240 if they'll give me my price, which would be 114. That's another $79,000 in premiums, guys, for a strike that I just feel like Palantir cannot get to. So yeah, I definitely, that looks appealing. The SoFi doesn't look appealing. This is where I could definitely do something. So we'll let it cook. We'll let it cook. See what happens. And again, I'm being very, very selective here. I'm not trying to rush into a bunch of trades or anything like that. I got to get my price. I got to get my price. Look at MSTR is just comfortably in our sweet spot here. I'm not going to do anything there. BMNU, we're trying to get our money over here on the covered calls. We're trying to get our money over here on Palantir. On Apple, is there anything? Can I add more contracts here? I don't like that IV rank. I would like to see a higher IV rank because then I could, theoretically get more premiums. Same thing. Well, the Google one is a little bit more appealing actually, but that's already 2.2 million in notional. I could definitely see me doing something with Google because I'm going to get 87,000 and it's only tying up $95,000 in capital. This is where I was saying, maybe just take this off the table. And it's kind of like transition that money over to Google, and over the next 256 days, you're essentially, it's just the shore money versus, the home run play over here. But at the same time, I'm like, it's not really going to move the needle one way or the other to close these leaps. And then who knows if they would actually even close? You know what I mean? Like the spread might be very, very high. Because I paid 30. So I wonder if what would happen if I closed it. Would I get, yeah. You see the spread's very wide, right? Between 24 and 35. Yeah. So no, not going to happen. Maybe if it gets up to like 115 or so, then maybe I would be able to get closer to a break even there. But I'm not going to sell those leaps at a loss when I'm totally okay with it. I do like the idea of doubling this position here, though. I do like the idea of doubling the Google position. So there it says position right there with the little suitcase. So I just open that up right there. You can see that it's very high out of the expected move. So I'm just going to click on that one on the bid sell. And then I'm going to click on this one. And then we're going to add 100 contracts. And I want to get the mid price. So Review and send. We're getting, almost $87,000. Our buying power is being reduced by 93 grand. Submit. And that was quick. That was quick. So now we go over and we see that we have 200 contracts now with $174,000 of extrinsic value. I could probably do the same with Apple. And 220 feels very comfortable. I don't see a world where it's going to go to 360. Yeah, let me do that. So I'm going to go here to Apple, find a little suitcase where it says position, and we're just going to add to them. So the 220 and 360. Notice how I'm not having to look at any technicals or anything, guys. I'm just literally picking a strikes that I'm comfortable with. I'm ticking it down a little bit just to make sure it fills. We're getting another $71,000 in premium. We're reducing our buying power by another $95,000. We'll hit submit. It'll take a little while, but it should fill. And that's all of it. So don't see the need to sell any calls on SoFi. I certainly am not going to be adding to this backstop trade today after this amazing run. The one thing that I could do down the road is I can increase the strike price. Like I could go from like 22 to like 24, right? I could roll the strikes up or go from 22 to 25. And I could bring in $128,000 more dollars that way. So those are the things that you could do to follow the strike up, follow the trade up, the shares up, and bring in some more money. But I feel like I don't have to do that right now. Like there's plenty of time. I'll have plenty of time to do that. And the one thing that I do want to get better at is I don't want to overmanage. I feel like I just overmanaged way too much last year. So I want to just kind of like chill out, let the trade really present itself. Kind of like this Palantir trade to where it just makes a lot of sense to go from 260 to 240. But I'm also going to be like a little bit more stubborn trying to get my price before I just like tick down right away and try to get filled real quick. So those are the things. So that's all of it in a nutshell, guys, for today. Very, very thorough. I hope you guys appreciate the format. Let me see if there's any more questions that you guys might have. And I'm going to get ready because I've got some FaceTimes. I got a lot of FaceTimes that I wonder why I can't get this thing. There it is. Got a lot of FaceTimes today, so I got to get on those. I appreciate the 78 people rocking with me live on YouTube, the 1147 on X. Mostly these are going to be members only. I'm just kind of trying to give a lot of people a preview of what's to come in 2026. So it's going to be me talking all through the trades. It's like classes in session. This is why I'm selling this put. This is why I'm selling the call. This is the vision for the trade. This is what I'm going to do. Crap goes south. This is what I'm going to do if it goes up. I'm walking y'all through all of it. And then when the actual trade is placed, Alex will turn those into clips for you guys as well. Appreciate you guys. Got to get rocking and rolling. What's going on? I nod. Let's go. Also, BMU. You always regret not taking a higher cover call strike. Oh man, I just hopped in at the end. Why don't you do options on NVIDIA? I have done options on NVIDIA before. I have other fish to fry right now, and I feel like my hamburger stand is very, very full with the positions that I have. I just feel like there's a lot of money to be made with what I have right now. So I'm always that's just the thing. That's where I'm at. Like I'm never looking for more menu items. I'm always like, how can I maximize the amount of money with the stocks that I'm already in? And NVIDIA is one that I've been in off and on, over the last couple of years, and I made good money with it. Not great money, but good money. But I just feel like I don't understand it as much as like the SoFis of the world. I'm not as comfortable with it. I don't have Tesla in the portfolio right now either. So that's definitely one that I'm eyeballing. Tesla, TSOL. I would like to get it back on there, but I don't like the portfolio looking that busy. Like right now I have 10 positions on. There's a lot of Bitcoin stuff on there, right? There's MSTR, there's or crypto stuff. There's BMNR, BMNU, ASST. So until I can maybe get out of that ASST trade, like if it were to pump, then I can maybe bring on an Nvidia or something like that. I just don't want too many positions. I don't ever want to have more than 12. It's just too much to look at. It's overwhelming. And when I'm on a fly, let's just say there's a huge IV expansion or something, I'm on vacation, I'm having to do this on the phone. I just don't want to feel overwhelmed. And I think that if I just have too many positions and all of a sudden I'm in a pinch and I got to make 3 or 4 moves real quickly because I'm getting margin called and all that stuff, I feel like that creates a lot of room for error. And then now I'm in a situation where I'm like, tasty trade, Jesus, take the wheel and just get me out of whatever positions. And I don't want to put myself in that predicament. So I hope that answers. I hope that helps you out. Appreciate you guys coming on. Will donation, man. I appreciate each and every one of you guys. I'm going to get rocking and rolling now. I hope y'all like the format. I appreciate each and every one of you guys for tuning in. Again, we're going to keep it very, very positive on this channel at all times. If somebody has a trade idea and you don't agree with it, let's just cheer them on and let's help them make money. But this isn't a channel where we're going to be like, hey, your stock sucks. Nobody wants to hear that their girlfriend is ugly. Nobody wants to hear that. If they're already in that relationship, let's help them make money. It might not be the relationship that you would be in, and that's okay. How many of y'all have friends that are married to people that you wouldn't want to be married to? They're the ones that are married to them, not you, though, right? Think about it. I just had something fill in the background, so that's exciting. Appreciate you guys. Do you like? I do. It scares me a little bit, though. It scares me a little bit that I love crypto so much. So I'm trying to have the Google and the Apple and Amazon's going to get back in there. So the very first one that's going to get back on the portfolio before anything else is Amazon. I'm extremely bullish on Amazon for the next 3 to 5 years. I just haven't been able to hit it, man. I haven't been able to hit it yet. I had 10,000 shares of Amazon at one point, and it's just things that I'm working on. It's like I know when I have a winner, like the Soxel trade, I feel like I left a couple $1 million of money on the Soxel trade. Like I knew this thing was a no-brainer when it was like $15 last year, and I didn't stick it out. So when I have a winner, when I feel like I know that this is it, let's place the chips in the middle, and let's let it play out. I want to work on that for 2026 because I feel like I left a lot of money on the table with a couple of plays I was absolutely sure of. Neo is another one. I left a lot of money on the table this last year on Neo. I was absolutely sure this thing was on a path to profitability, and then I just moved the money elsewhere. And it's worked out, because we're making money. But at the same time, it's like, do you do all the work on this stock? You do all this work, training the horse, and then you don't end up riding into the winner circle. You know what I mean? So you're kind of annoyed by it. So there's definitely some things that I'm working on for 2026. Another thing that I am like aggressively working on is cussing. I don't want to cuss nearly as much. Occasionally a good F-bomb just makes you feel real good, but I don't want it to be part of like my everyday vernacular. I want to reserve them for like the right time. Appreciate you. Smart move, know your limitations. Exactly. Hey, what's going on, Bill? Appreciate Bill White, man. He helped out so much with the trackers, been a guest on the show several times. And then he's also helped with some ideas on the book to help get it to another level and to give you guys a good product. I really think there's just a couple of things I want to clean up. Like my wife wants me to eliminate like some dollar amounts and stuff. She just thinks it's a little bit like condescending. So she wants it to be more like universal, if you will, more positive in nature. She doesn't want it to have like that braggadocious type of a feel, and I understand that. So we're going to clean up those things a little bit. And then there's like a part like in the beginning of the book where, because it's kind of how I feel like there's a lot of investing books out there that are like an absolute joke. It's like all theoretical. But she doesn't think that we need to say that. So I'm going to have to eliminate that from the book as well. She just doesn't like the vibe that it's putting out. Anyway, I got to get rocking and rolling. I appreciate each and every one of you guys. Big fan of Ralph Lauren since I was a kid. I've been wearing, I love horses, my favorite animal. Uh, I am a cowboy, if you will. I know how to rope and ride, mend a fence, drive a tractor. I grew up on a ranch. So I always liked the shirt because it had the freaking the horse on there. So never played polo. So it's one of those things. So yes, I do have a lot of Ralph Lauren clothes. I just think it's not very expensive. I mean, some of it is, but for the most part, it's not, and it lasts a long, long time. I just think it's just some of the best value for the money. You know, I have some shirts that I've had for like 5, 6, 7 years, and I still wear them, and they still look pretty good. Anyway, I got to run. TJ the Will Deal signing off. As always, Mayor Sky Stay Blue Stock Screen. Peace out. God bless you guys. We'll see you guys in class again soon. Now, if there is any other trades that I make, I will be going live 5-10 minutes at a time throughout the day. If I find something else that catches my eye, that is the new twist for 2026. Every trade live. If not, I'm not able to go live for whatever reasons, I'll do a screenshot and I'll post that on our WhatsApp group. I'll try to post it on the X for the subscribers as well. And then I'll make a live about it. But I'll give you all the trade, like at least the snapshot of the trade, whether it's a brand new trade or I'm rolling, managing, whatever the case may be. And I'll try to give that to you guys in real time or as close to it as I can throughout the way. TJ Will Deal signing off. As always, remember, guys, stay blue stock stream. Peace out. God bless you guys.